What is going on YouTube, guys? It's Brendan from Market Makers. A little bit of an earlier, well, it's 1 o'clock. I thought it was earlier for some reason. But guys, we got to talk about the markets because when I woke up this morning, started making some breakfast, and then I took the dogs out and I saw on my Twitter, I was getting some feeds, and you got all the guys out there saying the next bull run has started, bears are so stupid, 10K is never going to happen. Guys, what we do on this channel, as you long-term subs know, is we trade. So we trade up and down. So I don't sugarcoat the TA. If I see the market in the primary downtrend, I will tell you that. And that's where we are right now, guys. And we have targets. And guess what today is? August 8th. What did we literally talk about yesterday? August 8th. Potential day to look at in the GAN number. We got a 4% up move in Bitcoin. Let me show you the key resistances that I see on the chart. You guys can trade it as you see fit. Also, our NASDAQ trade that I've been setting up for the last couple of days, discussing with you guys, hit the perfect entry point. The S&P did exactly as I said it would. So let's get into all of this. Guys, if you want to trade these markets, please check out our sponsors, BITGET for all the cryptos, link in the video description, and SimpleFX to trade everything else. The bonuses are exclusive with our link. The private tournaments are exclusive with our link. And come trade with us on our Telegram. If you just want trade signals, they're in the video description, and the join button for the Discord to meet all the other professional traders, 11,000 people on the Discord, TA, live streams, bunch of good stuff, educational material. Let's jump into this, guys, going straight into Bitcoin. Let's go ahead and nosedive into this. So the issue that I have, I saw Crypto's tweet. I don't know who on my team followed him, but it popped up on my Twitter. And so I saw his tweet saying, this is it, the next bull run or something to that effect. I might be mixing it with Carl's or something, but lots of people are super bullish. But guys, we need to look at the facts as they are, okay? So the 618, 24023, what did we do? We pumped up. Remember, we have volatility compression, and we got rejected at this 618. Let me zoom in so you can see this a little bit better. Go ahead and zoom in. You wicked above the 618, came back down. You got to the 618 here, and you're just pushing up against it. Why is this particular 618 at 24,000 such a difficult resistance? Not just because it's the 618. And as you guys know, I've clearly stated over and over again, this is a bullish trend with higher lows and higher highs all in range. The problem that you have is the resistances above you, okay? This particular 618 at roughly 24K, you got as high here and trend at 24,685. Do you know why you were rejected at 24,685? It's not a secret. If you go over to your weekly time frame, guys, you got rejected at 24,685 because you have, what is this, the 233 on top of you here? The 233 at 24.6, okay? This is the problem that Bitcoin has. You have this problem of being wedged between the 200 and 233 on the weekly down time frame and a primary downtrend. You have to flip this. So going back to that daily chart, this is why I said you have to get on top of the 618 and you have to hold it as support. There's two primary structures you can look at with candlesticks when you're looking at a breakout from a Wyckoff trading range, okay? Two primary structures. The first primary structure when you're on top of the range or just underneath the range and you make the cup, right? You guys hear me say this all the time. I get new subs, I just want to talk about it again. But you make your cup pattern. You exit the range, you pull back, also called a Livermore pivot, and then you explode up. The problem is when you fail, okay, you start over again. You're making your cup again, and now you're trying to come back again. Eventually what happens if you continue to fail is you start doing this. You make a cup, you come up, you make a cup, you come down. And when it does fail, eventually you make a double top and fall down. The market moves in patterns, okay? Wyckoff realized this. Understand all you're doing with Wyckoff here is you're boxing in a volatility trading range using some key indicators here of what that range is. Having your selling climax candle here denoted by at least a third of it being wick. So you have this key indicator here of what you're doing. You have a bullish trend and you have to make a certain pattern to move up. Could you just parabolically go up? Yeah, I mean, anything's possible, guys. We're talking about probabilities. The highest probabilities of success are for Bitcoin to make a cup pattern, get volume, and move up. If it doesn't get volume, it will roll back down, possibly in another higher low fashion like this, and then try it again. And then you have the series of higher lows, which is bullish, but you keep failing at the same place. This is the problem right now you have with Bitcoin. You're failing at that weekly, what is that, the 200, 233? Let me check it to see which one it is. It's annoying me. It's the 233, right? So you're basically failing just underneath this. And this is right at 24.6, 20. It's hard to get the line, because it's an imaginary line. But 24.550, 24.650, right in that $100 range, okay? That's where you keep failing. So before you get super bullish, understand what I'm doing personally. If we get a breakout structure, I'm looking to potentially trade the breakout, which we haven't had yet. Yes, we've had this continual ascension here, but again, looking at the other markets, knowing that they're on low volume rallies. And when I read some comments, and I'm not picking on anybody, somebody said you can have rallies off a low volume. Yeah, you can have rallies off a low volume. We're having it in the equities markets. The difference is when you want a decisive move in the market, okay? All right, this is for you, Bev. When you want a decisive move in the market, you want a big volume move. Look at the time segmented volume for this down move. Do you see this? So if you just grab this move, guys, I mean, you look at this. This move came all the way down 45%, starting from that peak, right? Where the volume really kicked off is right about here on this candle. And we can just go ahead and look at this like this. If to shrink this down, so you can see this, look at the amount of the size difference here of the volume. And then on the VSA, look at the size difference on the volume. This is how you get big moves in the market. You get, this is, in this case, it is a breakdown for volume, right? You have volume ascension, price declination. And when the volume starts to decline and peter off, the trend reverses. This happens over and over again. So you have, this isn't necessarily low volume for Bitcoin. This is difficult to show you on Bitcoin because Bitcoin's a controlled asset. More than half of it's owned by institutions and whales. So they can move the asset around. It's much easier, as you guys know, to see this in the indices themselves. But it's the same concept, okay? To get big explosive moves, again, 45% move, you want big explosive volume. When you have little wave volume like this up and down, don't expect a big explosive move. As a matter of fact, expect to hit key resistance and potentially go sideways some more and try to hold your level, okay? That's what you're doing here. If you look at your money flow, you came up to the EMA cloud, got rejected again. So the 618 is your problem. That 233 on the weekly is your problem. And if we go ahead and let's zoom into this a little bit, let's look at some other problems Bitcoin has here, okay? Before everybody gets too nuts, too crazy. So one thing that we have here, again, is we have a cup and handle pattern, okay? This is like a disjointed cup and handle, but you can see this here. And now you're getting these wave patterns up around the same area, like a volatility compression pattern, okay? So this is your higher low, shallower wave, higher low, shallower wave. What Bitcoin can do here is come back down, try to hold that 0.5 at 23,390, and then try this breakout again. As it gets shallower and shallower, this is a volatility compression pattern. And to put this in context for you, if we give this handle a top, I guess don't have a candle that lines up perfectly across the range, but something like that, okay? If you give this handle here, go ahead and get rid of that so you're not confused, like this. Okay, so here's your cup, here's your handle. You give this handle a top, you keep making these shallower waves. We know about the compression. Let's look at it again. It hasn't moved even with this little 4% pump. That's the wrong thing. Where is it? RSV. I'm talking to you guys like you can answer me. RSVVB. If you look at this little pump hasn't changed the compression at all. You clearly have compression. And guys, to be 100% clear again, I expect a potential move up. Our peak resistance is above us. Our peak resistance, we have the weekly 233, we have the 45 from the pandemic low, we have the 150 moving down, and the 200 and 233 are well above us at 33K. Like I said, if you get super bullish and have a super explosive move, This is where I think you can get to. Now you can get some spiky tops above this, but I think this is your ultimate resistance. And of course, this would start dragging over into the 45 here and just pull you down, okay? This is your ultimate resistance, but I don't know if we can get that far. I'll show you in the equities markets why I think that. Wow, there we go. That's what I was trying to do. And so this is what I'm looking at when I'm looking at Bitcoin, again, on the daily. But you do have this nice volatility compression pattern, okay? These usually go in a pattern of 3 to 5. So I would say you have 2 here so far for your handle, okay? So you have your cup that came up, you're forming your handle, you basically have 2 waves. What this third, potentially fourth and fifth wave, if you can keep these higher lows up here, you want to see if Bitcoin can break out. And of course, that first target at 26,072 is going to be right there with your 150 on the daily. But you want to see a volume spike for a sustained breakout. You want to see volume spike up, follow through with stronger volume, just like this declination, as you can see here. Big move down, followed through with strong volume, okay? And then what happens? That trend dies out, you make a bottom, you start getting strong volume again for your new uptrend, okay? That's all you're doing, guys. It just repeats itself over and over, rinse and repeat. And let's look at, what's this, 4 hour? So 4 hour time frame. You can see your, what is that, 233, 150, 200. And again, it's just, you know, this is going to be more candles, obviously, but this is still what you're looking at here. You basically have this wavy, disjointed cup, and now you have your 2 spiky tops here for your handle. You're still making these higher lows. But guys, this candle right here is right about where that weekly 233 is. That's going to be key resistance for you. So that's really what you want to pay attention to, is getting up to this level. You have these candles here. This is actually, isn't that? I didn't notice that on the daily. This is right about, yeah, I mean, it's right about the same level right here. You see that? So this is like your key resistance area. You can wick above it, but you got to get above this and hold it. You got to get above it and hold it as support. Your clouds are garbage. These are extremely weak clouds, and this is going to form even weaker right here. These are extremely weak clouds. As you guys know, you can punch through these quite easily over and over in trend. You want a thicker support cloud like this. You're getting really weak clouds due to the volatility. But to me, this is nothing to get excited about yet. This is nothing to be even super bearish about yet either, okay? Because you do have, I trade at peak resistance and strongest levels of support. And you're not at peak resistance unless you completely fail here at the 618, but you have a nice bullish uptrend. So your strongest levels of resistance in a downtrend, a primary downtrend, is going to be your long-term moving averages, these 45 angles that extend out to the beginning of the bull run, and the 1618 at 29,386. Okay, this range right here at the 45 and the 1618, if Bitcoin just keeps doing this, this would be a very nice move up. And these are profitable moves, and you can look at this on the 4 hour time frame to see if you can get above this range, get above that weekly 233, then you could definitely have some more upside. Okay, that's what I'm looking at there. Ethereum, guys, same way. We laid this out in Wyckoff yesterday. I mean, look, so you had your pump with Ethereum, you got your wick up, and now what? You're just back inside your trading range again. So again, nothing to be super bullish about, nothing to be super bearish about. The trend that was existing, which was bullish, is still intact, and breaking above this trend would be very beneficial to the asset. Let's look at the S&P. Look at this. So we drew this yesterday. The S&P did exactly what I thought it would do. I said we're so close to the 200, 233, I can't imagine we're not going to even flick it, right? Let's go ahead and get that drawing off so we can look at this. There we go. So you can see we hit the 233. We wicked up, got rejected. We're getting close to the indices building tops, okay? You're not going to hear that on CNBC. They don't know how to analyze volume. They don't know how to use a trend-based fib. They don't know how to use GAN concepts, okay? You're not going to hear that on Fox Business News. You're just going to get macro views, things that they say like Jim Cramer. The markets just aren't that bad. They're not that bad. People just need to get out if they're scared. This is a good market. You know, this company has great fundamentals. It's only trading at 150 times price to earnings, like ridiculous things, right? They're not looking at the price action. That's the other thing, guys. You know, don't you know, people in crypto do this all the time, but they get like emotionally attached to the asset, and people do this with some of the meme stocks. You saw it with GameStop. You see it with Tesla. Tesla is the most heavily optioned stock by far. But for me, it's business. You're going to work every time you turn on your phone and you want to trade. You're going to work to make money, right? I don't care if the S&P goes up or down. I want to make money. I don't care if Bitcoin goes up or down. I want to make money. If I own physical Bitcoin, I would care more. But that's part of the reason I don't own these assets. I trade them, okay? So this is what I like to do. And looking at this, knowing that we're just now hit the 233, the 1618 is above us at 4271. I also know there's a key Gann concept about the law of three, just like our law of three market pattern. We've had three up weeks now in the S&P. Potentially this week could turn around and start to be a reversal week. So we're going to see if that plays out. We're at the 233, not quite at peak resistance, but again, this always comes down to trade selection. This is why I look at trade selection. You have to look at your trade. Sometimes the smartest trade is the trade that you don't take. This trade could easily roll over, like I said yesterday. You are hitting the 233, but I don't have nearly as much confluence on the S&P as I do on the NASDAQ. And guys, here's another visualization here in the S&P again. Ascension of volume, declination of price. This is all selling volume, okay? This is how you get big moves in the market. And then when you have your volume divergence, volume continually going down, but price continually rising, you build tops. And of course, we went over this extensively yesterday, watched yesterday's video, spent a lot of time on volume divergence. Same thing here, low volume, largest move in trend. This is going to roll over and make a top. Whether it's where it's at now or at 42.71, this is where it's going to make a top in this realm, okay? But looking at my NASDAQ, guys, we talked about this, and look, this set up beautifully. Every trade always has a possibility of failing. That's why you want to focus on high probability trades. A high probability trade for me, if you guys want to trade this on SimpleFX, again, 1618, right? Trend-based fib 1618. Hit the 1618. Wait it till we hit the 1618. The 150 is impacting you. The 233 is right above you. Extremely low volume, 17+% move up. High probability trade, but just like any trade, we can get some spiky tops above this. This can roll over. You could have buyers step in the market. All of a sudden, the Fed could say something tomorrow that we're not raising rates anymore, and the markets will go bananas. A peace treaty could be signed, could be another pump in the market. You can't control the external factors. What you can control is what you have on your screen and what you do with your fingers as far as entering a trade. Always looking at high probability trades and mitigate your risk. That's what you want to do. So I like this trade setup. This is a trade I posted in the room, and I want to see how this ends up playing out. I think that we're going to have some volatility here in the range as these other markets potentially move to their peak resistance because they're not at them yet. Looking at the Russell pumped above the 150, didn't quite touch the 233, but again, the Russell also not at its peak resistance, even though this is my favorite asset to trade other than Bitcoin. 1618 is at 1997, Russell's at 1932. So we're not at peak resistance. We still have the 233 above us, haven't touched it, and we have our descending 45 giving us that triangle shape. I mean, this would just be the ultimate. And actually, I can show you this. I forgot to do this yesterday. Let's change that 150 to the 200. You can see exactly where the 200 is. I mean, this would just be a fantastic trade. Look at that. The 200 is right here on the 45 angle. I mean, this would be fantastic if the Russell is somehow able to muster its strength to come up to this area, hit the 1618, get between the 233 and the 200, and fail right here, right at 1997. High probability trade, I would be taking that trade, okay? Again, I do believe primary downtrend, extremely low volume rally. We're not even technically in a bear market anymore in the equities market, but I can't put on blinders and not see the world around me. US savings rate is now for the consumer, is now at the lowest it's been since 2009 in the great financial crisis. Credit card usage and debt just hit the second highest level in recorded history last month. Now, the thing is, the U.S. economy, the government metrics, they just measure it by dollars. In other words, they see the consumer. If you hear JP Morgan and these guys go on the news and say, the consumer's still really strong, they're still spending money. Correct. But guys, here's a very simple example. If your gas used to cost $2.50 a gallon and now it costs $5, you're spending twice as much for the same product. See, they don't adjust it for inflation and they don't go by volume. Right? So if you're spending 30% more at the grocery store, according to some of these geniuses, these textbook geniuses, they're like, oh, it looks like, Jill's spending is up 30%. She must be financially very well off right now. No, Jill's just having to pay for all the extra inflation. It gives the appearance of a paper tiger, like you are physically strong, but you are actually fundamentally weak. And that's the U.S. consumer, which is why the U.S. consumer surveys keep coming in at new all-time lows. Okay, so I can't understand this information coming in and then just say new bull market has started. It doesn't compute with my brain. Maybe it does with some of you, but it doesn't compute. The world, the economic factors in the world are actually getting worse, not better. If we were getting better, I would be looking at bull run opportunities, but things are going to gradually get worse as the economy contracts by design. And by design, I don't mean a nefarious plan. I mean, literally, the Fed is telling you we have to destroy elements in the economy, the housing market, demand. We have to raise unemployment. How is that a bull run atmosphere with 40-year high inflation? It's not. And so many of retail are going to get absolutely annihilated when these markets do turn around. And judging by the tweets that I'm seeing on my Twitter from the crypto space, once again, retail is going to lose their other arm. They lost one arm on this last downtrend, holding on, and then now they're going to lose the other arm when Bitcoin ultimately does capitulate. And for those of you that can just open your mind a little bit, understand the macroeconomic factors, understand the possibility of going up before you go down, you guys are going to fare very, very well, and I'm proud of you, each and every single one of you. All right, guys, that's your pep talk. Another video coming tomorrow. I'll answer your questions and comments and all that fun stuff. Talk to you guys tomorrow.